Good afternoon, friends. It is a great pleasure to welcome you all at this webinar of the Master Knowledge Series Triple E. The series Triple E has earlier started in the year perhaps 2019 when our CS Ranjit Pandey was president. And now again, this series has been started under the leadership of Manish Gupta ji, our energetic president. And this series duly chaired by my council colleague Shukla ji. Having hosted one of the webinars under the Master Knowledge webinar series just a few weeks ago, not only I am delighted to be a part of the journey, I am also happy to share that we have conducted 13 webinars so far. Each of these webinars have been on significant topics of corporate law and touch upon some of the very important provisions of Companies Act as well as SEBI regulations. The motive to organize such webinar is to excel our members, the governance professionals, which will help in dealing with practical problems encountered on a day-to-day basis. I feel grateful towards all the experts, professionals from the different corners of the corporate and professional world who have engaged with us in sharing their thoughtful insights. Our 14th webinar of this series today is on another significant topic, that is related party transactions under Ind-AS. Related party transactions this is called RPTs, have occupied a prominent place in the corporate deliberations. If corporate boards are expected to exercise necessary restraint in their activities, the professionals are expected to ensure diligent compliance also. Transactions with related parties tend to impact the financial position and performance of a company. This information can alter the assessment of an entity's operations, its risks and opportunities. Accordingly, the accounting standards have prescribed the related party transactions and transactions that need to be reported. To gain the insights into the reporting of transactions under Ind-AS, we are privileged to have with us our guest speaker, Mr. Kamal Garg. Welcome you, sir. He is a fellow member of the ICAI and has been the special invitee member of Accounting Standard Board, ASB, of ICAI for various years. He was also nominated as member of the expert panel for addressing queries relating to statutory audit pertaining to auditing aspects by Auditing Assurance Standard Board, AASB, of ICAI. Not only has he addressed the members of National Board of Accounting and Auditors, Tanzania, East Africa, on IFRS, he has also authored of various publications and commentaries on topics of IFRS and Ind-AS, audits, and many more. Our heartfelt thanks to you, sir, for joining us in this webinar series, for sharing your valuable views and thoughts on this topic. Over to you, sir. Mr. Kamal Garg, please.
So good afternoon to each one of you, and thank you, Sandeep Kejriwal, sir, for giving this introduction of mine. I'm privileged that ICSI invited me in this afternoon. Before I share my screen and discuss PPT with you, I have few questions to be asked. And I would request each one of you to keep their notepad and pen ready, because most of the things will be by word of mouth, not on PPT alone. My first question to the house is, when we say the topic is RPT under Ind-AS, now the abbreviation is spelled out as related party transaction. Now, related party is one part and transaction with parties related is another part. Hence comes the question number one. And because I can see Kejriwal, sir, so I would be happy if I can have answers from the audience to my side also. Question number one is, let us take a situation. There is a company, ABC Limited. ABC Limited has established a Section 8 company as its subsidiary. I emphasize, ABC Limited has established a Section 8 company as its subsidiary. Let us name this subsidiary also ABC Foundation. Now, my question to the house is, whether for the purposes of, I emphasize the word purpose, whether for the purposes of Ind-AS, Section 8 company will be considered as related party or not to ABC Limited? This is my question number one. Question number second, and I must tell you, my questions are not easy. They are pragmatic questions from real industry level. Question number second is, let us assume Sandeep Kejriwal sir is running a company. I am his employee, and he gave me an option to work from home. So what will happen? I will work from home, but I will be using my laptop, my small space in my room. That means my home infrastructure I would be using to provide services to company of Sandeep Kejriwal sir. So question arises, I am related or not, that is a different question. My second question is whether this free of cost service will be considered as RPT or not. RPT means I am adding transaction word. I am related to the company because I may be a director or maybe KMP, but whatever services this way I am providing, which were never a part of my contract when I was appointed, whether it will be considered as RPT. This is a real challenge in real world. As a consultant, we face so many tremendous challenges in this very area. Number third question, again a tough question. Number third question is, let us assume I am a shareholder in ABC Limited. I am a KMP also in ABC Limited. Now what happened? ABC Limited declared dividend. ABC Limited declared dividend. Now I will be getting this dividend in my capacity as a shareholder, but I am a KMP also in this company. So being a KMP, I am related. Now question to the house is whether dividend payout by a company of which one of the KMP is also a recipient, whether it will fall into the clutches of being a related party transaction. And there are so many questions which I will be asking you when I will be scrolling my PPT. Number 4 question, and I would request the audience, don't search on Google. Question number 4, whether for the purposes, again I repeat the word purpose, whether for the purposes of Ind-AS, independent director is considered as related or not. In my real world sense, along with my some colleagues who are company secretaries, what we feel as a challenge is most of the professionals are losing an opportunity in this whole curriculum of RPT by not aligning the RPT under Companies Act, with RPT under Ind-AS, with RPT under SEBI LODR, with RPT under IBC. I will not touch upon IBC today because that is not the agenda also. And why I am asking this question? To ask you one more question. The question is, can you name me few transactions? I repeat, can you tell me few transactions which are not related party transactions under section 188 of Companies Act, but are related party transactions under Ind-AS? So these are few questions which I believe the people would be happy to learn and understand because these are real industry issues. This is only a ice-breaking scenario which I asked. Many more details will come up in my PPT. But yes, I must tell you, RPT is one of the area where relations are changing, the way acts are changing. Sandeep ji may be my relative under Ind-AS, but may not be relative in Companies Act. He may again become my relative in IBC, but he may not be my relative under Companies Act. So the way definition is changing raises a question, because today we are meeting for Ind-AS. So the meaning of relative under Ind-AS is quite different, because in the Ind-AS 24, the word relative is not used. The word relative is not used. Rather, there was a close member of the family. And you would be on a lighter note if I say close member of the family will also include those couples who are in living relationship. When you will see the definition, you will get to know. So with your permission, Kejriwal sir, can I share my screen now? Okay. So I'm sharing my screen and the PPT. I would be glad that if you can share your questions towards the end of my deliberation. But yes, the topic is not simple. The topic is technical. I will not say difficult. It is technical topic. Kejriwal sir, my screen is visible?
Yes, sir.
Okay.
Yes, please.
So this is a topic given to me. Related party transactions under Ind-AS, RPT in short. And I must tell you once again, there are two different expressions embedded in RPT. One is related party and second is related party transaction. First, we will understand what is the meaning of related party. Then we will understand what is the meaning of RPT, that is transactions. Now, how come Ind-AS? How come Ind-AS? There's a reason. If we go to SEBI LODR, in SEBI LODR, we have regulation number 2, 1ZC, which was amended by 6th Amendment Regulations 2021. Now see the yellow highlighted area. I will touch upon this yellow portion only because other things are not relevant as far as Ind-AS are concerned. See the words. The regulation states that related party means a related party as defined. So see the circulation. There is a circulatory reference. The circulatory reference is related party as is defined as a related party. So related party means a related party as defined under section number 2, clause number 76 of Companies Act or applicable accounting standards. I will not read the second paragraph because that is not relevant to Ind-AS. Now see the words applicable accounting standards. When I say applicable accounting standards, it will include accounting standards as well as Indian accounting standards. And today we have the agenda of Indian accounting standards, that is Ind-AS. Ind-AS are notified by virtue of companies Indian Accounting Standard Rules 2015 under chapter number 9 of the rules. Now, I have one more question over here. How many of us professionals have analyzed whether the definition of related party given under section number 2, clause 76 is aligning or not with the definition of related party under Ind-AS 24 or AS 18 as the case may be. We will also discuss one clip where we will have a comparison of section 2, clause 76 with definition of Ind-AS 24. So now because of this yellow highlighted area, the accounting standards knowledge becomes important. And what does standard deals? Ind-AS 24 deals with related party disclosures. The heading is using the word disclosure, but surprisingly, once we deep dive, you will find that it will include transactions also. Now be very careful. We will discuss some case studies also. Let us start with the definition part. The definition of related party can be discussed in 2 segments. This is segment number 1. Now be very careful. I'm pointing over here. Just give me a moment. Now just see the mouse pointer movement. Segment number 1. Ind-AS 24 states that a person or a close member of that person's family. What is close member? We will see at a later stage. A person or a close member of that person's family. In short, it is called as PCMFP. Person or close member of family's person. Person or close member of that person's family shall be related to reporting entity. Let us assume reporting entity is RST Limited. So this person will be related to reporting entity in the following cases. Now case number 1. This person will be related to reporting entity if he has control of reporting entity, or he has joint control of reporting entity, or he has significant influence over reporting entity, or he is a member of the KMP in the reporting entity, or he is a member of KMP of the parent of reporting entity. Very simple definition once we read at a literature level. But once we deep dive, the definition was not simple. See the word control, see the words significant influence, and then see the words KMP. Now question arises whether these words control, significant influence, and KMP will be defined as per Companies Act or as per Ind-AS. The correct answer is as per Ind-AS. You can take a note. The note is the words control, significant influence, and KMP under Ind-AS 24 shall be defined by Ind-AS themselves and not by Companies Act. And why it is important, let us understand. If you go to Ind-AS, we have Ind-AS 28, Ind-AS 110, and Ind-AS 111. How they define control, joint control, and significant influence, just see over here. They say control exists when the investor is exposed or has rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over investee. I'm not asking any question here now. I will simply read, then I will ask questions. I read the definition once again and emphasize. Control exists when the investor is exposed or has a right to variable returns. Please underscore these words. Investor is exposed or has rights to the variable returns. This is control. Now, what is joint control? Joint control is a contractually agreed sharing of control of an arrangement which exists only when decisions about relevant activities require unanimous consent of the parties sharing control. So me and you will be having a control over an entity only when without you I cannot proceed, and without me you cannot proceed. That means unanimous consent. Now, significant influence. The standards defines significant influence as the power to participate. See the word participate. Power to participate in the financial and operating policy decisions of the investee, but is not controlling these policies. If you compare these definitions with Companies Act, there is a vast change. If you go to the Companies Act, section number 2, clause 27 defines control as the right to appoint majority of the directors or to control the management or policy decisions exercisable by a person or persons acting individually or in concert, directly or indirectly. So this could be joint control also, because the words used are individually or in concert, including by virtue of their shareholding or management rights or shareholders agreement or voting agreements or in any other manner. So in this section number 2, clause 27, solo control is also included, joint control is also included. Now, how the significant influence is defined? Explanation A to section number 2, clause 6. Section 2, clause 6 defines associates. Its explanation defines significant influence to mean controlling at least 20% of total voting power or control over participation in business decisions under an agreement. So if you see the Companies Act, significant influence is also having the percentage criteria of 20%. Now, if you see the definition over here, I must ask you a question which I'm typing on the screen. Let us take a hypothetical question. Wipro Limited, this is the pure academic question. Let me give a disclaimer this way. Let us assume Wipro Limited is holding 100% voting power in Ajim Premji Foundation Section 8 company. Now the question is whether this Section 8 company will be considered as related party to, or I should change my question, will be considered as under control of Wipro Limited for the purposes of Ind-AS 24. So Sandeep ji, if you can see any of the participant is replying, please pass on the answer to me. I repeat this question for the audience. Wipro Limited is holding 100% voting power in Ajim Premji Foundation. Ajim Premji Foundation is a Section 8 company. Now my question is, if you see at a macro level, this Section 8 company is becoming subsidiary of Wipro Limited as far as Companies Act is concerned. That is beyond doubt. My question is, what you will be replying as to whether this Section 8 company will be considered as under control of Wipro Limited for the purposes of Ind-AS 24. Any answer? For the sake of convenience, let me show the definition of Ind-AS 24 once again. If you see the meaning of control over here, they say control exists when the investor is exposed or has rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over investee. Very simple answer, I must say. As far as Companies Act is concerned, all of us are at consensus that yes, Wipro Limited is exercising control over Ajim Premji Foundation. That is beyond doubt. No iota of doubt. But, dear friends, please take a note. As per Section 8 of the Companies Act, this Section 8 company cannot distribute dividends to its members. It means that if I go by the definition of control over here, in my definition, the words used are when the investor is exposed or has rights to variable returns. Now, because of Section 8 restriction itself, in my example, Wipro Limited is having no right to the variable returns that Section 8 company will earn. So whatever surplus or income Section 8 company will be earning, there is no involvement of Wipro Limited by virtue of Section 8 of the company itself. Meaning thereby, the answer will be no control because Wipro Limited is not having any rights over the returns of Section 8 company. I believe this point is clear to each one of you. And this is something important to understand. You must be aware, if you go to CSR rules, under CSR rules, it is permitted that implementing agency can be a Section 8 company established by the company itself. So what you need to understand, in such a case, for all the legal purposes of Companies Act, there is a holding subsidiary relationship. But once you come to Ind-AS 24, it will be wrong to say, I emphasize the word wrong, it will be wrong to say that Section 8 company is under the control of the parent company. Why? The reason is simple, because the control definition over here under Ind-AS is quite different. This says control exists when the investor is exposed or has rights to variable returns from its involvement with the investee. Investee in my example is Section 8 company, and I am not getting any returns from that investee. Automatically, I will be having no control under Ind-AS 24. I believe my point is clear. Sandeep ji, any doubt over here? Clear. Okay.
Clear.
Now,
Please go.
what you need to understand, here we have concluded that there is no control. I have not concluded that Ajim Premji Foundation is not a party related. I am simply saying control is absent. But still the question arises whether if I add this question on a second note also, the second note will be, let me put it here, the second note will be whether the Section 8 company will be considered as related party of Wipro Limited for the purposes of Ind-AS 24. Control is not there. So as per Ind-AS, Wipro and Ajim Premji Foundation are not considered as holding subsidiary. But now question arises whether Wipro and Ajim Premji Foundation can be considered as party related. Answer is yes. See the definition of significant influence. Power to participate. So obviously, parent company can participate in the financial and operating policy decisions of Ajim Premji Foundation, but there is no control. So what is the meaning thereby? The meaning thereby is, if I go to this second question, yes, by virtue of significant influence. I believe this point is getting clear to each one of you. And why this is important, please understand. You can take a note, although you may be aware, we have section number 134, subsection 3, clause H. Section number 134, clause 3, subclause H deals with disclosure of significant contracts and arrangements with the related parties in form number AOC 2. That disclosure which we are making there for the purpose of director report is not on the basis of Ind-AS, is on the basis of Companies Act alone. So you have to prepare a reconciliation, the reconciliation of director reports disclosure and notes to accounts disclosures. So now what is the conclusion? The conclusion is Section 8 company will not be considered as a subsidiary of its parent, but will be considered as under significant influence of the parent. Now, let's see this example and please tell me whether there is a relationship existing or not. So the question is, Mr. X has following positions in various companies. You need to tell me whether Mr. X will be considered as related party or not to various companies. Number one case, Mr. X is holding 51% equity of RST Limited. So question number one is whether Mr. X is party related to RST Limited. Answer is yes, by virtue of control. Second is Mr. X is holding 50% equity of LMN Limited. Other 50% is by Mr. Y. Again, Mr. X is related to LMN Limited and Mr. Y is also related to LMN Limited by virtue of joint control. Just see the definition once again. Control, joint control. I have covered first two examples. Next, Mr. X has following positions in various companies. He is holding 25% equity of DEF Limited. So 25%, I am assuming it is more than 20%, and it is an indicator that significant influence is present, and hence Mr. X will be deemed as related to DEF Limited. Next, Mr. X is MD, or you can say whole-time director, or you can say manager, or you can say company secretary, or you can say CEO, or you can say CFO in ABC Limited. Is he related party? Answer is yes, because he's KMP. I am yet to cover the definition of KMP, but yes, for the time being, he is KMP, and hence he is related to ABC Limited. Next, Mr. X is a managing director or whole-time director or manager or a CS or a CEO or CFO in PQR Limited. And what is PQR Limited? It's a holding company of ABC Limited. And if you go to the definition, the definition says, if you are a KMP in the parent company, even then you will be deemed as related to the reporting entity. So in my example, what will happen? By virtue of he being a KMP of holding company, he will be deemed as related to not only holding company, but also to the subsidiary company, that is ABC Limited. This is a tight question. Mr. X is independent director in SUV Limited. Just see the definition once again. Whether any word like independent director is used here, answer is not. So question arises, the words independent director are not used in this definition, but the words KMP are used. So keeping this thing in mind, whether Mr. X, who is the independent director in SUV Limited, will be considered as party related or not to SUV Limited, answer is yes. Answer is yes. Please understand, I told you in the very beginning also, the definition of KMP in Companies Act given by section number 2, clause 51 is different from the definition of KMP given by Ind-AS 24. And here comes the difference. Ind-AS 24 defines KMP as those persons. See the first paragraph. Let me point it out. Ind-AS 24 says KMP are those persons who are having authority and responsibility for planning, directing, and controlling the activities of entity directly or indirectly, comma. Let us stop here, and then second segment, including any director, whether executive or otherwise, of that entity. These words, any director, whether executive or otherwise, signify that independent director is also the KMP for the purpose of Ind-AS 24. Institute of Chartered Accountants of India has also clarified that by virtue of this definition, independent director will be considered as KMP. I emphasize the word for the purposes of Ind-AS 24. But if you see the definition of KMP under Companies Act, section number 2, clause 51 defines KMP in relation to the company to mean CEO, MD, manager, or CS, or whole-time director, or CFO, or such other officer not more than one level below the directors who is in whole-time employment, designated as KMP by the board, or such other officer as may be prescribed. This prescription also includes the director of the holding company. Now, if you see and compare these two paragraphs, independent director is not covered as KMP under Companies Act, but it is covered as KMP under Ind-AS 24, and meaning thereby, if I go to this example, Mr. X being independent director in SUV Limited will qualify him to be called as related party of SUV Limited as KMP. So whatever sitting fees he will pay to the independent director will be called as a related party transaction. I believe this first segment of definition is clear to each one of you. So this is the first part of definition. The next part of definition is an entity shall be related to reporting entity in the following cases. An entity shall be related to reporting entity in the following cases. Now, what are these cases? Let us see one by one. If the entity is a member, if an entity is a member of same group, then it will be deemed as related to reporting entity. What is the meaning of group? What is the meaning of group? The word group is defined in Ind-AS 24 to mean parent, subsidiary, and fellow subsidiary. To mean parent, subsidiary, and fellow subsidiary. Next, an entity shall be deemed as related to reporting entity if it is an associate of reporting entity. Number third, if it is a joint venture of reporting entity, if it is an associate of reporting entities group, or it is a joint venture of reporting entities group, or are joint ventures of same third party, or the entity is a joint venture of third entity and RE is the associate of such third entity. Don't worry, we will do examples for each one of these points. Or entity is a post-employment benefit plan for the benefit of employees of RE, or RE is related party, or entity provides KMP services to RE, or to the parent of RE. KMP services can be example is virtual CFO services. So virtual CFO services will fall into KMP services. Then entities controlled or jointly controlled by PCMFP above. So first segment we discussed. The person was in the first segment. If that person is controlling the reporting entity, controlling this entity, then this entity will become party related to reporting entity. And lastly, such reporting entity controlling PCF above has significant influence over the entity or is the KMP of the entity or entity's parent. But you need to understand very carefully and meticulously, the word used is group. So common parlance, the group may be defined differently by different persons. But Ind-AS 24 has given a definition. The word group means parent, subsidiary, or fellow subsidiary. Let us understand this second segment of definition through an example. Example number 1, AXA Limited has the following positions in various companies. Let us assume the reporting entity is RST Limited. So first case, AXA Limited is a subsidiary of RST Limited. If AXA is subsidiary of RST Limited, what will happen? AXA and RST will be related by virtue of this first case, members of the same group, because AXA and RST are having the position as parent and subsidiary. Next, AXA is associate of RST Limited. Again, there will be relationship by virtue of this second segment, is an associate. Then AXA is a joint venture of RST Limited. Again, there will be relationship by virtue of this third segment. Next, AXA is associate of PQR Limited, holding company of RST Limited. Just see very carefully. AXA is associate of PQR Limited, holding company of RST Limited. Who is the reporting entity? RST. And what is AXA position? AXA is the associate of reporting entities holding company. Where it will go? Is an associate of RE's group. RE's group means it could be my holding company also, or a fellow subsidiary also, or subsidiary also. In my example, it is holding company. So again, there is a relationship. AXA is a JV of PQR Limited, holding company of RST Limited. Now this PQR is the group of RST. Now AXA is the JV of one group entity. JV of one group entity will make it related party. Next, AXA is associate of TUV Limited, subsidiary of RST Limited. So TUV Limited is a subsidiary of RST Limited. That means TUV and RST are in one group. And if my company is a associate of group entity, then what will happen? It will make it related, this fourth segment. Next, AXA Limited is a JV of TUV Limited, subsidiary of RST Limited. Same answer. You are a JV of the group entity and hence you are related. Then AXA Limited is a JV of DEF Limited. Now be careful. AXA Limited is JV, joint venture of DEF Limited, and RST is associate of DEF Limited. So again, the same thing. Just see here. Entity is a joint venture of third entity, and RE is the associate of third entity. Here, third entity is DEF. So for this third entity, RST is associate and AX is JV. So both will be deemed as party related. Next, Mr. B holds a position as MD. Let me make a small correction. Mr. B is a MD and holds 30% equity in LMN Private Limited. Reporting entities RST Limited. Now the question is whether Mr. B will be related to RST Limited if Mr. B holds 75% in RST Limited. Answer is yes, by virtue of this second last segment. Is controlled or is jointly controlled by PCMFP above. So here LMN and RST will be related. Mr. B also will be related. Then Mr. B and Mrs. B each hold 50% equity in RST Limited. So concept of joint control, and that's why LMN, RST, Mr. B, Mrs. B, all four will be related to each other. So this is the second part of the definition. That means this one. Having said that, let us understand what is the meaning of close members of the family. I told you in the beginning that the word relative is not used here. The word used is close member of the family. And how they have defined close members of the family? They say close members of the family of a person are those family members who may be expected to influence or be influenced by that person in their dealings with the entity, including his dependents, his children, his spouse or domestic partner. So these are the new words. Domestic partner. These words domestic partner are neither used in Companies Act, nor used in LODR, nor used in IBC, nor used in Accounting Standard 18. But it is used only in Ind-AS 24, then his brother or sister, then his father and mother. What is the important element? Ind-AS 24 further says, when we say his spouse or domestic partner, it will also include the children of domestic partner and dependents of spouse and domestic partner. So children issuing out of the live-in relationship, the person who is in live-in relationship, the dependents of that very person will also be deemed as close members of the family. I repeat this point once again, but you need to understand the word relative is not used in Ind-AS 24. The words used are close members of the family. Ind-AS 24 further says, following are not related parties. So these are the exceptions, but these exceptions are not that much easy. They say following members are not considered as party related. Number one, two entities simply because they have a director or other member of KMP in common. So there is a company ABC Limited, there is a company RST Limited. Mr. X is a director in ABC Limited. Mr. X is also a director in RST Limited. And let me assume Mr. X is a KMP. In that very case, both companies will not be deemed as related because KMP is common. So if I put it in a different way, let us say this way: Mr. X is independent director in ABC Limited. He is also independent director in RST Limited. You know very well, independent director is considered as KMP under Ind-AS 24. So if he is independent director in two otherwise unrelated companies, they will not become related simply because there is a common KMP. Then two joint venturers, simply because they share joint control of a joint venture. Let me make you understand through this chart. So there are two joint venturers. Number one is RST Limited. Number second is TSR Limited. They formed a joint venture SRT JV Limited. Now RST and TSR will not be considered as party related over here. Why? Because the exception says two joint venturers will not be deemed as related simply because they share joint control of a joint venture. Providers of finance. So like you raised loan from a bank or NBFC in ordinary course of business, they will not be considered as your party related. Trade unions, they will not be considered as your party related. Public utility companies or entities, for example, you have electricity connection, you have water connection, you have telephone connection. These companies who are providing you these connections, utility companies, will not be considered as your parties related. Then departments and agencies of a government that does not control, jointly control, or significantly influence the reporting entity simply by virtue of their normal dealings with an entity. So, for example, you are a construction company and you constructed a building for Ministry of Corporate Affairs. You will not be deemed as related to that MCA, or MCA will not be deemed as related to that contractor. Then a customer, supplier, franchisor, distributor, or general agent with whom an entity transacts a significant volume of business simply by virtue of resulting economic dependence. So whatever output I am producing, majority output is meant for you only. In that very case, you and me will not be deemed as related. For example, let us say the company is a power generation company, power producing company. Whatever power is being produced by that company is being purchased by only one company exclusively. Then both will not be deemed as related unless and until they are otherwise related as per the definition. Now, prima facie, it seems that things are easy when we see these exceptions, but these in fact are not. I have a small question over here, and I would be glad to have the answers. The question is again academical. Let us assume there's a bank PNB Limited. It has granted term loan to, say, RST Limited. Section 186 of the Companies Act states that prior approval of public financial institution is required if loan being granted by RST Limited exceeds thresholds. However, PNB Limited is not PFI under the Companies Act. The loan agreement with PNB contains a similar covenant as above on similar lines of section 186 4, but with respect to PNB. Now the question is whether such approval makes PNB controlling RST Limited. And one more thing, plus one more covenant. PNB's approval is required for all purchases of more than rupees 10 crores. Yes, what is your take? So we know very well section 186 says that you have to take approval of public financial institutions if the loan being under proposal to be granted to another person exceeds the prescribed thresholds. But as we understand, PNB is not a public financial institution under section number 2, clause 72 of the Companies Act. So that provision is not applicable primarily to PNB. But what happened when this loan was given by PNB to RST Limited, the same kind of provision, or I should not say the similar kind of provision was also written as a covenant in the loan agreement, whereby PNB stated that if you wish to give loan to others, you have to take our approval first. Plus, one more condition was inculcated. The condition was that if you wish to purchase more than rupees 10 crores, then you have to take our approval first. So these two kind of restrictive elements are there in loan agreement. Question arises whether these restrictive elements as approval make PNB controlling over RST Limited, because the very moment you will say it is controlling, the PNB and RST will become party related. So answer is no. Because exception says providers of finance are not considered as related parties. But the question is not that much simple. Let me change this question a bit. It is not PNB Limited. Let us assume this is PQR Limited. Now, PQR Limited is a normal company. PNB was a bank. Now, question arises. Just give me a moment to make some changes. Assuming that PQR is parent of RST Limited. Yes, what is the answer now? Are you able to understand the distinction? On one hand, Ind-AS 24 gave an exception that providers of finance, just see this line, providers of finance are not considered as parties related. So what I took the first example of Punjab National Bank Limited. And we very, carefully came to a conclusion that the Punjab National Bank has given loan to RSC Limited, irrespective of what is written in the term loan agreement, they will not be considered as parties related. But I changed my question now and I stated that now the company is PQR Limited, which is a holding of RST Limited, and holding company has given loan to RST Limited. Now we understand that by virtue of section number 186 subsection number 11, if the loan is given by a parent company to its wholly owned subsidiary, then special resolution approval is not required. That is what the law says. But the question arises whether PQR Limited, being a holding company of RST Limited, shall be considered as a party related, or shall we say that they are not related to each other because they are the providers of finance? Answer is PQR and RST will be considered as RPs on account of holding subsidiary relationship. So primarily there were two conditions now. One is holding subsidiary and second is provider of finance. Provider of finance condition is not applicable over here because of holding subsidiary relationship coming into being. So that we need to be very careful about, because in a single situation, multiple elements can be there. So I will skip these questions because these questions I have covered orally. Once you will get the PPT from ICSI, you can go through the theoretical wordings of these questions. Now, KMP definition I already covered. Let us understand what is the meaning of government, because they were saying government is exempted from being a party related. So what is the meaning of government? They say government means the government or the government agencies and similar bodies, whether local, national or international. So when they say local, national or international, so for example, United Nation body will also be considered as government for the purpose of Ind-AS 24. But the same entity will not be considered as government as far as Constitution of India is concerned. Now, why I'm saying Constitution of India? Because the word government is not defined by Companies Act. So we have to go to article number 12 of Constitution of India to understand government and instrumentalities of the government. Then is government related entity. Ind-AS 24 says government related entity means an entity that is controlled, jointly controlled, or significantly influenced by the government. It will primarily include government companies. So the words used are controlled, jointly controlled, or significantly influenced. Now, we have understood what is related party. Now let us understand what is the meaning of related party transaction. Please take a note of one point. Section 188 has not defined, I emphasize the word defined. Section 188 has not defined related party transactions. Rather, it has listed various types of related party transactions. I emphasize my words once again. Section 188 of Companies Act has not defined related party transaction. Rather, it has listed some of the related party transactions. But once you come to Ind-AS 24 or AS 18, as the case may be, Ind-AS 24 has defined related party transactions. Ind-AS 24 has defined related party transactions. And what the standard says? Standard says related party transaction is a transfer. I emphasize the word transfer. The word transfer is nowhere defined in Ind-AS. I repeat, the word transfer is nowhere defined in Ind-AS. So related party transaction is a transfer of resources, services, or obligations. Transfer of resources, services, or obligations between a reporting entity and a related party, regardless of whether a price is charged. So charging a price is not important for Ind-AS 24. So long as there is a transaction, and transaction means transfer of resources, services, or obligations between reporting entity and its party related, it will be considered as RPT. Charging of price is not a criteria for a transaction to be qualifying as RPT under Ind-AS 24. With this very background of the definition, here comes this question. This question I asked in the beginning also. Now let us put this question in a proper sense. The company is RST Limited. Mr. D is the managing director of the company. Now, being Mr. D as a MD, quite obviously he is a KMP, and hence Mr. D will be a party related to RST Limited. So on one part, I believe we must be at a common page that RST Limited and Mr. D both are party related. Now, what are the facts further? Due to COVID-19, work from home was instructed even for Mr. D. Mr. D, while working from home, has arranged the following: high-speed Wi-Fi facility, one small room dedicated for office work, online platform for arranging virtual meetings with clients of the company. This is the question which is a kind of big debate in industry. And the question is whether the arrangements made by Mr. D so that he can provide the services to RST Limited, which is a party related to Mr. D, will make the provision for these arrangements, as related party transactions in the financial statements of RST Limited. I repeat my question, and I would be glad to have the answers from the audience if Sandeep ji can pass me the answers. The question is whether these arrangements made by Mr. D, the MD, being a party related to RST Limited, will make these arrangements as reportable related party transactions in the financial statements of RST Limited. Please don't give me the answer at least that none of the company has done this thing. None cannot be the rule of the law. Sandeep ji, किसी के आंसर?
Kamal ji, my cross question is that if RST Limited has not paid anything to Mr. D, how can it be a transaction?
That is the thing which Ind-AS 24 is rising as a contention. Just see the underlined words, regardless of whether price is charged.
Okay.
Had this small wording not been there, the things have been easy. Life would have been easy. And these are the words of contention, because these words are not there in Companies Act. These words are only in Ind-AS 24, or if you go to AS, in AS 18. Now, this is the one kind of debatable issue. Let us analyze this way. Price is not charged. Let us be at consent. Let us ask ourselves, first of all, whether there is a transfer of resource, service, or obligation or not.
Yes.
Answer is yes. Transfer of services is there.
Yes. Yes.
So what ideally should have happened, which companies are not doing, and somehow I believe we as corporate professionals must advise the company. Why this advice is required, Sandeep ji? Because now LODR is also amended, and LODR is saying RP means as defined by accounting standards. So it will be captured there for LODR also. And how to report in financial statements, what I will be doing, I will be disclosing a fact that certain services were provided by Mr. D without charging any price as facilitation services on account of work from home. So what we will call these services as facilitation services, work from home. Matter over. And this is the, when I was invited for this program, I was also discussing to the inviter. This is the main thing which we corporate professionals must always examine, regardless of...
Kamalji, one answer I got from a participant that it will be form part of ordinary course of business, so it is not RPT.
So, sir, what answer or question that gentleman is saying is as far as Companies Act is concerned. Companies Act is using the word ordinary course of business. Ind-AS 24 says whether the transaction is at arm's length or not, whether the transaction is in ordinary course of or not, so long as transaction is with party related, it will be disclosed.
Second reply, this is not a RPT because it is a part of the remuneration paid to Mr. D.
Now, if it is a part of remuneration paid to Mr. D, then himself he is giving the answer. Because under Ind-AS 24, remuneration paid to KMP is nothing but a RPT. So what is happening, Sandeep ji? In our DNA, Companies Act is traveling so much that we are mixing up Ind-AS 24 with Companies Act. That's why I told in the beginning that Companies Act need to be aligned with Ind-AS 24.
And the next reply is, Mr. D has made the arrangements not for provisions of services to the company RST Limited, but for discharge of his own duties. So that there means, is no...
Yes, that means what is happening, whatever remuneration is getting, let us say his remuneration is rupees 100. That remuneration will be deemed as inclusive of these facilitation services. That is what Ind-AS 24 is saying. So agar mujhe, if I say in a very layman sense, if I'm getting rupees 100, no, and I'm working from home without charging anything from my employer, it means that rupees 100 is inclusive of these services also. And that is what Ind-AS 24 says.
And Kamalji, one question from a participant, then, but would it need prior approval from the audit committee?
No,
If it is RPT?
No, that is the thing, na, Sandeep ji. Again, the same question is coming. Ind-AS 24 has no connection with approval from audit committee per se. Approval goes to section number 188. And Ind-AS 24 is about disclosures. That's why in the beginning I asked you one more question. Tell me some transactions which are not there in section 188 but are covered by Ind-AS 24. This is one of the transactions. Second transaction, guarantee transaction. If a holding company is giving a guarantee to a subsidiary company, holding company gives a guarantee to subsidiary company, you check section 188. In section 188, loan transaction and guarantee transactions are not considered as RPT. But this loan transaction and guarantee transaction are considered as RPT under Ind-AS 24.
कमल जी, एक बात तो मेरे को बोलनी पड़ेगी कि आपने ऑल 5000 पार्टिसिपेंट को रखा है लाइव.
सर ये तो बड़प्पन है
All the
लोगों का कि they
5000
are giving me time.
participants are
I am
live with
really
you.
humbled that audience is giving me time. I am really humbled. Thank you very much for that. But I believe the session is brainstorming session.
Yes.
So what we need to understand, and you can take a screenshot also, because this was the main point I wish to capture. It is a kind of caution to each one of the listener, and that is our duty also, being corporate professionals. Section 188 do not define RPT. It merely lists some of the RPTs. Now come to Ind-AS 24. It defines RPTs and it also includes loan guarantee, free of cost goods or services that took place between RPs. And that is what the tip is: align section 188 with Ind-AS 24. Why? Specifically because of regulations 21Z C of LODR. I believe the point is clear to each one of you. So what is the conclusion coming out? The conclusion coming out is Ind-AS 24 is a broader standard. And I should write one more thing. ALP is important consideration. ALP means arm's length principle, arm's length price. If you come to this Ind-AS 24, ALP is not an important consideration. Sandeep ji, I believe my point is clear now.
Yes, clear.
So we as corporate professionals, maybe chartered accountants or company secretaries or cost accountants, or maybe any other professional for that matter, we need to be very careful. And here comes the question, one more question for the house. Disclosures. Forget about the first 2 points. I will come to first 2 points at a later stage. I need to come to this question. See the last point about disclosure, because ultimately disclosure has to be done for a RPT. So question arises, whether dividend paid by subsidiary to holding company is RPT. Forget about first 2 points. I will cover these first 2 points in a while. Now we all have understood what is RP. We have understood what is RPT. RPT means transfer of resources or services or obligations between two parties who are related. Now, it is quite obvious in my question, holding company and subsidiary company are party related. So, subsidiary company is giving dividend to holding company. It is a transfer of resource, that is cash, from subsidiary to holding company. So, whether it will be considered as RPT. So, ladies and gentlemen, please take a note. Under the Companies Act, section number 188, payment of dividend by subsidiary to holding company is not RPT. But payment of dividend by subsidiary to holding company is a RPT under Ind-AS 24. I repeat this point once again. Payment of dividend by subsidiary to holding company is not RPT under section 188 of Companies Act. Point number one. Point number second, payment of dividend by subsidiary to holding company is RPT under Ind-AS 24. And here I must ask you one question, and I would request the audience not to search on Google. The question is whether payment of dividend by subsidiary to holding company is a RPT under SEBI LODR. Whether payment of dividend by subsidiary to holding company is RPT under SEBI LODR. Please take a note. Answer is no. Regulation number 2. Regulation number 2, sub-regulation number 1, clause ZD states that in its proviso that payment of dividend is not considered as RPT under LODR. So what is the conclusion coming up? The conclusion is payment of dividend by one party related to other party related is a RPT only and only for the purposes of accounting standards. In our context today, it is Ind-AS 24. It is not considered as RPT under Companies Act or under SEBI LODR as the case may be. Sandeep ji, clear hai ye wali baat? This is clear?
Yes.
Okay. Now let us come to these first 2 points which I skipped for a while. Disclosures. What are disclosures required? Disclosure number 1. You have to disclose related party transactions and outstanding balances with other entities in a group. Number 2, intra-group RPTs and outstanding balances are eliminated. So whatever intra-group transactions are there, obviously in consolidated financial statement, they will be eliminated, except for those between an investment entity and its subsidiaries measured at fair value through profit or loss. We will not go into this detail. I can simply share one example. Suppose that your company is a venture capital company or a private equity investor. So these private equity investor or venture capital company, if they have a subsidiary in which they have invested as a venture capitalist or as a PE investor, then this intra-group transactions will not be eliminated. Now, to understand this thing, I will cover one example in a while. Some more disclosures. Aggregation, very, very important. What they say, items of similar nature may be disclosed in aggregate, except when separate disclosure is necessary for an understanding of effects of RPTs on the financial statements of the entity, but not done in such a way as to obscure means to hide the importance of significant transactions. Thus, purchases or sales of goods are not aggregated with purchases or sales of fixed assets. The law further says in Ind-AS 24, nor a material RPT with individual party is clubbed in an aggregated disclosure. So let us understand this through an example. Please consider this example and try to answer this question. What they say, during 22-23, H Limited purchased goods from its subsidiaries as follows. So H Limited is having 5 subsidiaries, S1, S2, S3, S4, S5, and purchases are given respectively as 80, 120, 55, 15, 30, total is 300. So total 300 worth rupees of goods were purchased by holding company in cumulative manner from all the subsidiaries. H Limited feels that all the transactions are similar in nature and are with the same type of RP, and hence only aggregate information should be disclosed. State your views. If I go back to the theoretical element over here, what they say, similar items can be aggregated if they are with the similar RPs. Now here, transaction is similar purchases, RP is also similar subsidiaries. So what I will do, in my financial statements, I will make only one column. The column will be subsidiaries, and in the row, I will write purchases from subsidiaries. Instead of writing purchases from S1, S2, S3, S4, S5, what I will do, I will write total purchases from subsidiaries 300, matter over. But it is not simple. Let me tell you, it is not simple. Most of the corporates are committing a mistake in financial statements. What they are doing, they are disclosing 300 rupees as total purchases on aggregated basis. It is not right, because one more point is there. Just see the underlying statement, which is being missed by most of the corporates. What they say, nor a material RPT with an individual party is clubbed in aggregated disclosure. So what the standard is trying to say, there are 5 purchases here. You can aggregate, but you will not aggregate that purchase which is material in nature. Now the word material is not defined. So any idea what is the meaning of materiality? 80, 120, 55, 15, 30. Total is 300. Simple thing is, normal law is you can aggregate all the purchases. But there is an exception. The exception is all these purchases can be aggregated, no doubt. But you will not aggregate that purchase which is material in nature. Any idea what is materiality over here? So the word material is not defined. And accordingly, the materiality will depend upon facts and circumstance of each case. So if I say purchases more than 10% are material, that may be dependent upon your materiality policy as per LODR. So 300 multiplied by 10% will give you 30. So all those purchases which are more than 10% will be separately disclosed, and which are less than 10% can be aggregated. That could be one of the view. But yes, what you need to understand, aggregation principle comes with a caveat, and the caveat is nor a material RPT with an individual party is clubbed in an aggregated disclosure. Next disclosure is relationship between a parent and a subsidiary shall be disclosed irrespective of any or no transaction between them. What is the meaning thereby? Say you are a holding company, I am your subsidiary. During the whole year, you and me have not even a single paisa of transaction. Still, in the financial statements, we have to disclose the name. I will disclose your name as subsidiary, as holding. You will disclose my name as subsidiary, even if there is no transaction. Then what is the disclosure requirement? The name of its parent, and if different, than ultimate controlling party. If neither of the entity's parent nor the ultimate controlling party produces CFS, CFS means consolidated financial statements. If so, what is happening? If consolidated financial statements are not prepared, then what you will do? In your notes to accounts, you will disclose the name of next most senior parent. So if you are an intermediary subsidiary, and by virtue of Rule 6 of Companies Accounts Rules, being an intermediary subsidiary, you are not preparing CFS. So what you will do? In notes to accounts, you will disclose the name of ultimate senior, next senior parent. Then further, KMP compensation. Please recollect, for the purpose of Ind-AS 24, KMP also includes independent director. So in notes to accounts, you will give a separate disclosure of remuneration paid to all the KMPs, and that breakup will be there. The breakup will be in short-term employee benefits, post-employment benefits, other long-term benefits, termination benefits, and share-based payments. So sitting fees paid to independent directors will come into short-term employee benefits. Now, please understand, independent director is not my employee as KMP, and for the purpose of Ind-AS 19, he is considered as employee. Ind-AS 19 deals with employee benefits. So please understand this thing. Independent director for all legal purposes under Companies Act or LODR is not an employee. But for the limited purpose of disclosure practices, he is considered as employee under Ind-AS regime. Please consider this question. NDA company acquired 100% of Ind-AS Corporation prior to 2022. During 22-23, the individual companies included in their financial statements the following. So NDA and Ind-AS, they have given your financial statements as an extract, and standalone results are given. So standalone basis, NDA P&L says officer salary, respectively amounts are given, officers expenses, loan to officers, intercompany sales. So question is, what should be the reportable segments at consolidated level? We know very well, we have just seen. Just see here, intra-group RPTs and outstanding balances are eliminated. So what will happen? When we will prepare consolidated financial statements, intercompany sales of 1,50,000 will be eliminated, and then consolidated P&L will show officer salary as 1,20,000, that is 75 plus 50,000. Officers expenses as 30,000, that is 20,000 plus 10,000. Loans to what will happen to intercompany sales? They will be eliminated. So in my view, I must say, had this point not been there about intragroup elimination, doesn't make a difference, because even otherwise we were supposed to do the same thing. Now, government related entities and disclosures we have already covered in an oral sense. So we have to have this exemption. The exemption is exemption to disclose. To whom this exemption is available? Government related entities. The standard says there is an exemption to disclose RPT, outstanding balances including commitments with government, that's control or joint control of significant influence, or with another entity that is up RP because of the same government. So one ministry is having, let us say, MCA. MCA is the parent body, let us say, for ICA and ICSI. This will not make ICA and ICSI party related, and there is exemption to disclose the transactions between them also. Now, this is the last discussion from my side, then we'll take up some questions. I told you in the beginning that how far you have aligned Section 2, Clause 76 of the Companies Act with Ind-AS 24. Before the alignment, let us capture the definition of Section 2, Clause 76 in a quick sense. Section 2, Clause 76 says, in relation to a company, the specified person, what is the meaning of specified person? That is parties related. So in relation to a company, the related parties are director of the company or is a relative, KMP of the company or is a relative. A firm shall be deemed as related to the company if in this firm the director of the company is a partner, or manager of the company is a partner, or relative of such director or manager is the partner. The definition further says, in relation to a company, the related parties are a private company. So a private company shall be a party related to my company if in such private company, my director is a director or a member, my manager is a director or a member, or the relative of my director or manager is a director or a member in such private company. A public company shall be deemed as related if the director or manager of my company is a director over there, and the word is and holds along with his relatives more than 2% of its paid up share capital. This is what the company law is saying as a definition of RP. And why we are studying this definition? To see how far this definition is equated or not equated with Ind-AS 24. The law further says, in relation to a company, the following are parties related: any body corporate whose board of directors, managing director, or manager are accustomed to act in accordance with the advice, directions, or instructions of a director or manager of the company. Any person on whose advice, directions, or instructions a director or a manager of the company is accustomed to act. And the law is very clear here. They say any advice, directions, or instructions given in a professional capacity shall not attract Section 188. So if I am a company secretary and I am advising the board of a company, then I will not be deemed as related to that board. Similarly, if I am a company secretary, I'm advising to the board and the board always acts as per my advice, then board, although is accustomed to act as per my directions or instructions or advice, but still there will be no relationship because of this proviso. Now, the law further says, in relation to a company, the specified persons are any body corporate which is a holding, subsidiary, or an associate of a company, subsidiary of a holding company to which it is also a subsidiary, that is fellow subsidiaries, an investing company or the venturer which is an associate of the company, and then such person as may be prescribed. Now, what is the prescription? Rule 3 of companies definition rule states that the prescription is director of the holding company other than independent director is my party related. KMP of the holding company is a party related to the subsidiary. Then relative of such director or KMP are also party related. Way back in 2015, notification was given whereby in case of a private company, section number 2, clause 78. 8 means this left-hand side will not apply, meaning thereby, by virtue of this notification, if there is no default in filing of annual accounts and annual returns, then you are entitled to an exemption, and the exemption is a holding or a subsidiary or associate of a private limited company or a subsidiary of a holding company or private limited company will not be considered as party related. So in a way, co-associates or fellow subsidiaries are exempted to be called as RP for a private company. Now just see this tabular comparison. Left-hand side is the definition of section 2 clause 76 and right-hand side is the definition given by Ind-AS 24. And you will be glad to see section 2 clause 76 is cent% aligned to Ind-AS 24, although with a different wording. So wordings are different because I told you very clearly that Ind-AS 24 is much broader than section 2 clause 76. So I can always say section 2 clause 76 is in totality covered by Ind-AS 24. Because in Ind-AS 24, the word KMP includes independent director also. But the same KMP is not including independent director when it comes to section number 2, clause 76. And more importantly, all the KMPs are not covered over here. If you go back to section 2, clause 76, who are the KMPs covered here? Only the manager is covered over here. Or if MD will be there, MD will be covered over here. Or if whole-time director is there, he will be covered over here. CEO, CFO are not covered here as KMPs. But if you go to Ind-AS 24, those other KMPs are also covered. So I will not read this chart. I will give you 30-40 seconds. Just have a look out on the comparison because section 2, clause 76 is minuscule before Ind-AS 24. Ind-AS 24 is broader and it covers entire gamut of section 2, clause 76. This SO means, H means holding company, S means subsidiary company, SO means associate company, F means fellow subsidiary. And all these were covered by the definition of group we have seen earlier. Let me show you the definition once again. If you see over here, I define the group. Group means parent, subsidiary, and fellow subsidiary. The same thing is captured in section 2, clause 76, read with Ind-AS 24 as well. Having said that, how far you have an understanding that RPs have an interplay with CARO? CARO means Company's Audit Report Order, and section 188 of the Company Act. There is a big interplay. Just have a comparative look out of this interplay. Ind-AS 24 says RPT is a transfer of resource or obligations between RPs regardless of whether or not a price is charged. That is a definition of RPT over there. In this context, let us come to CARO. The statutory auditors are required to report under CARO, obviously for those companies on whom CARO is applicable. So para number 3, subpara number 13, para number 3, subpara number 13 requires the statutory auditors to report under CARO. And what are the reporting elements? 2 reporting elements are there. Reporting element number 1, he has to report whether all transactions with the RPs are in accordance with the sections 177 and 188 of the Company Act where applicable. And number 2 reporting is whether the details of transactions have been disclosed in the financial statements, etc., as required by applicable accounting standards. Now, please be careful. In CARO, the statutory auditor is reporting in 2 elements. One is the compliance of Companies Act. That is your first bullet point. And second is the compliance of applicable accounting standards. That is your second bullet point. So meaning thereby, being a statutory auditor, he is also duty bound to align the reporting vis-a-vis Ind-AS 24 aligned with Companies Act. Section 177 is audit committee and section 188 is listing of transactions which are with RPs. Now, if I say in a very succinct manner, section 188 subsection 1 says a company can enter into specified related party transaction only with the approval of the board. And 4th proviso says that nothing in the subsection shall apply to any transaction entered into by a company in its ordinary course of business which are on arm's length basis. I told you very clearly just few minutes back that this proviso is nothing doing for Ind-AS 24. It is totally immaterial. So whether your business with RP is in ordinary course or not, is it at arm's length basis or not, it is not material, it is not relevant for Ind-AS 24, meaning thereby a statutory auditor will report in bullet point number 2 for sure, and the company need to disclose the same in notes to accounts also. But when you come to section 188 approval requirement, for approval requirement, you have to check this 4th proviso. And I told you that section 188 is not defining RPTs, it is listing some of the RPTs. And what is the list consisting of? The list is consisting of number 1, sale, purchase or supply of any goods or materials, selling or otherwise disposing of or buying property of any kind, leasing of property of any kind, availing or rendering of any services, appointment of any agent for purchase or sale of goods, materials, service or property, such RP's appointment to any office or place of profit, underwriting the subscription of any securities or derivatives. If you see this list, Let us compare this list on a macro level with Ind-AS 24 also. Ind-AS 24 has given illustrative list. I must say illustrative list. And the list says these are some of the examples of RPTs. Before we see these examples, let me tell you the same element which I discussed few minutes back. There is a general presumption that transactions reflected in financial statements are consummated on arm's length basis between independent parties. However, transactions between RPs may not be affected at the same terms and conditions as between unrelated parties. Sometimes no price is charged in RPTs. For example, free provision of management services and extension of free credit on a debt. Meaning thereby, once you will deep dive in Index 24, this very para says, even if no price is charged or the price is an arm's length basis, still you have to disclose. And the examples include, most of the examples are similar to section 188 list. These two lines are something extra and important. Number one, finance, including loans, equity contributions in cash or kind, guarantees and collaterals. If you see these last two bullet points, these are not here in section 188, but these are present in Ind-AS 24. With this small discussion, let me ask you a question. The question is, again, I must give a disclaimer. This is a kind of academic question. And the question is, say, RST Limited has given loan to PQR Limited. It's wholly owned subsidiary. No repayment schedule was specified and agreed upon. However, it was in principle understood that the subsidiary will repay only when it has capacity to repay, and RST Limited will not demand the loan ever. Question: how shall this loan be reflected in the books of, or I should not say books, in the financial statements of RST Limited and then PQR Limited? Let me change the font size. Yes, any answer? Any answer? Sandeep, can you help me if somebody is giving the answers? So loan was given by a holding company to subsidiary company, and there was no condition as to the repayment. Holding says, whenever you wish to repay, you repay. We will never demand the repayment. So in such a case, how this will be reflected? Please see. In case of RST Limited, investment in other equity of PQR Limited. This is as per section, as per Ind-AS 32, read with Ind-AS 109. And similarly, and this will come on the asset side. And similarly, if I come to PQR Limited, because PQR Limited has received this loan, so what will happen? PQR Limited will say other equity of RST Limited, and this will come on the equity side. So what is happening if I say, because accounting moves on substance over form, and I must tell you, this is the requirement of Ind-AS, not of accounting standards. So what Ind-AS says, if no conditions are specified as to repayment, in substance, it is the equity. And that's what is happening. They're calling it as other equity. Please understand, the transaction will remain in the characteristics of loan transaction only for the purpose of Companies Act. But for the purpose of financial statements, and if Ind-AS are applicable, they will presume and assume a character of promoter's contribution. And I would request the audience to take a note. JR Agro Industries case, NCLT Allahabad. In JR Agro Industries case, NCLT Allahabad, it was held that if a loan is given by a parent company to a subsidiary company without any stipulations as to repayment, it will be in the nature of promoter's contribution as other equity, only when Ind-AS are applicable. So being a corporate professional, we must always check that in the balance sheet. Say, if I'm a company secretary and I'm doing a secretarial audit, I may raise a question. Why the subsidiary company is showing the loan obtained from parent company in other equity? The answer will be, this is other equity for the purposes of Ind-AS, but it will remain a loan transaction for the purpose of Companies Act. This we need to be very careful. So what is the point coming up? We must be careful that certain areas need not be overlooked. First, assess whether a RPT is in ordinary course of business or not. Why? Ordinary course is required for Companies Act, not for the Ind-AS purposes. Then evaluate management representations that RPTs are arm's length or not. Again, the same thing. Relevant for arm's length is relevant for Companies Act, not for Ind-AS. And more importantly, be careful about the transactions which are in the scope of Ind-AS but are not in the scope of section number 188. So, Sandeep ji, from my side, this is the deliberation which I was instructed to do. If audience is having any questions, I would be more than happy to answer.
Kamal ji, one of the most vibrant deliberation by you. One of the most vibrant.
Thank you, Sandeep ji. Thank you very much, Sandeep ji.
And Kamal ji, you kept all the 5,000 participants vibrant.
Thank you, sir.
Along with you.
I am humbled, sir.
Your last question, one of my CS colleague has responded that this can be told as quasi equity or unsecured perpetual equity.
Agreed, sir.
And fair value has to be done for such loan.
Right. This is the really perfect answer in the right earnest. That is the technical sense of the Ind-AS. So the words he used, not quasi equity, they are the proper words.
Yes. My one CS colleague has asked one question, whether any transaction by a company with the resolution professional RP during CIRP period will be covered as RPT or not?
Yeah, answer is yes, for the purpose of Ind-AS. Why? If you go to IBC, Insolvency Bankruptcy Code, this IP is considered as CEO or a KMP for the purpose of Ind-AS by virtue of section number 15, 17, 18, 19, and if my memory serves me right, section 23 of IBC law.
Okay.
So what is happening? Again, the same thing. हमेशा हमें एक चीज याद रखनी है. We need to remember one thing always. Ind-AS moves on substance over form. And the substance of IP is that he is my KMP, he is CEO also. When we do ROC filing, but we are choosing their CEO. And for that very purpose, whatever remuneration is being paid by the corporate debtor, to whom? To the IP. That will be disclosed as KMP compensation. I must also say that the compensation so paid is not considered as RPT under Companies Act, is not considered RPT under IBC also, but it is there as IPT and RPT under Ind-AS 24. So very valid question and a fantastic question.
And one next question, to determine the criteria of arm's length pricing, should every transaction be accompanied with a certificate from a valuer?
Valuer is not required. Even a company secretary or a chartered accountant or a cost accountant can also do this kind of study. It is popularly called as a transfer pricing study. So in income tax, we have, you can take a note, section number 92E. E is the capital E. Section number 92E of Income Tax Act. You can take guidance of computing ALP from section number 92E of the Income Tax Act.
Okay.
Or whenever time permits you, you can also do one thing. You can search on Google, arm's length pricing, OECD guidelines. So OECD guidelines have given some methods to compute ALP. Those methods can also be used. And certification as such is not the requirement of the law. It is only a study we need to capture. For example, if me and Sandeep ji are into the board of directors, so we must have some document to establish yes, this transaction is an ALP. As of now, transaction certification is not required.
Okay. Next question is, what is the relationship between Ind-AS 24 and the Companies Act?
I already covered, sir. The relationship is,
Yes.
Ind-AS 24 is much broader. It also covers those transactions between RPs which are free of cost, which are at ALP. But these transactions are not covered under Companies Act. I
So
took
one
two, three
more
examples also.
Yeah, one more common question from all of us, all of our PCS or PCA or practicing cost accountant also, that how a company secretary of the company align with the different wording in Companies Act or AS 24 or LODR or in the form number AOC2.
Sir, let us answer it in a PC's manner. Let us first start with AOC2. AOC2 is a very simple form and it deals only with those transactions which are confined to section number 188. So beyond 188, AOC2 has nothing to do. The problem arises when it comes to financial statements and LODR. So what I will suggest is very simple thing. Just see this table once again. I'm showing this table once again. Just see here. So what we can do, obviously it requires an effort. You prepare a table, list of parties which are related under Ind-AS 24, list of parties which are related under LODR, and then Companies Act, and then start ticking exercise. Obviously, alignment will take place. It is requiring a lot of effort. So if I can do on PPT, I believe Office can do much more in a better manner.
Sir, next question is, will under Ind-AS convertible preference share by holding company in subsidiary also be treated as loan by holding company
Yes.
till it is
Yes.
converted?
Because preference shares either would be converted or would be repaid. So they will bear the character of either the other equity or the loan. If these are compulsory convertible preference shares with no option of getting redeemed in cash, they will be considered as other equity.
Yes.
If they have the option that either you can take cash or you can take equity, that means option is there, then companies need to decide as to what is the probability of option to be exercised. Depending upon that probability, either it will go to equity or it will go to loan.
Next question is, if the transactions is covered under Ind-AS and not under Companies Act 2013, whether such transactions shall be disclosed in AOC2?
Answer is no, but in AOC2 it will not be disclosed. In director's responsibility statement, you have to give a statement that all the disclosures in notes to accounts are as per Ind-AS. So ultimately, indirectly, they are covering.
Next question is, sir, the LODR states that the dividend paid by listed entity to its shareholders are not RPT.
Yes, I covered that. I told you.
However, dividend paid by subsidiary company to listed entity is a transfer of resource and to be considered as RPT.
Yes,
Please
that I
clarify.
already covered. If I show you, in fact, I asked this question Sandeep ji only. Let me show you this. Just see. If you try to recollect, I skipped these 2 points and I covered this point first. Then I told you that dividend payment by subsidiary to holding company is not an RPT under LODR and Companies Act, but it is RPT under Ind-AS.
Next question is, will easement rights granted to a director's relative be deemed as RPT?
Sandeep ji,
Under,
can you please repeat the question? Your voice was jarring.
yeah. Will easement rights,
Easement
EASEMENT,
rights. Yes.
easement right granted to a director's relative be deemed as RPT under
Answer
Companies
is
Act?
yes. Not under Companies Act. In Companies Act, answer is no. Unless and until somebody establishes that it is a kind of embedded lease or embedded office or place of profit. Otherwise, it is not a RPT under Section 128, but yes, it is RPT under Ind-AS 24. Because when we say easement right now, so we have to evaluate many other elements also, whether easement is having the embedded element of lease or not, any embedded element of usage rights or not. Depending upon that, it will go to Section 188. Because Section 188 also says using of services.
So this was the last question from the side of the participants.
Okay.
My special heartfelt thanks to you, sir, Kamalji,
Thank you, sir.
to give so many examples, to so many practical approach to us, and hope all of our participants have been benefited with your words of wisdom. Thanks to you.
So, Abhi,
Thanks to my
if time is
thanks to
there,
my
if time is there, I
time
can
also.
cover some more elements if you permit. Otherwise, we can wrap up
Yeah,
also.
time is there. Time is there.
Time is there. So, because I was
Please,
told,
yeah, please,
so shall I cover some more
please.
things?
Yeah, you may.
Okay. Let me share the screen once again.
हाँ.
Give me a moment. So, ऐसा करते हैं ना, टेस्ट ले लेते हैं एक. So let us cover some of the questions, theoretical questions. It will be a kind of revision also. और आपका टेस्ट हो जाएगा. Even otherwise, ICSI keeps on testing the members. So let us have one more test over here. संदीप जी, फेल तो नहीं करेंगे ना? रिजल्ट में डर लगता है सर. Okay, so this is question number 1, and let me see how we have understood. Question number 1 is, A Limited has two associates, B Limited and C Limited, and owns 25% of voting power of B Limited and 30% voting power of C Limited. Would B Limited is considered as a party related in financial statement of C Limited? So let us have a chart look out. This is the chart. A Limited is holding 25% in B Limited. A Limited is holding 30% in C Limited. This is the breakup. And what is the question? The question is whether B Limited is party related to C Limited. So B and C on the vertical side, whether B and C are related. So A and B related, A and C related. To this extent, no problem, because both are associates. But whether B and C are related to each other? Any answer? So B and C are not related because co-associates are not regarded as related parties. So answer is both B and C Limited are associates of A Limited. Co-associates cannot be regarded as RPs only by virtue of this relationship. Hence, as B Limited is not an associate of C Limited, nor is it being controlled directly or indirectly by C Limited, or is not so controlling C Limited, it is not RP of C Limited. Next, P Limited owns 70% of voting power of Q Limited. Q Limited in turns owns 50% of voting interest in R Limited. Further, P Limited also directly owns 18% of voting interest in R Limited. Would P Limited be deemed to have control over R Limited, or would it only be considered as exercising significant influence? Just see a chart over here. So P Limited is holding 70% in Q Limited and is also holding 18% in R Limited. P Limited is holding 70% in Q Limited and Q Limited is holding 50% in R Limited. So question arises whether R Limited is related to P Limited or not. Answer is yes. Because of subsidiary being Q Limited, there is a kind of indirect control over R Limited. Just see the answer. P Limited would be considered to control R Limited. The definition of control includes ownership, directly or indirectly, of more than 1.5 of voting power of another enterprise. As P Limited is a majority shareholder in Q Limited, It has a control over it. Further, P Limited has indirect control over R Limited. Accordingly, P Limited has the ability to control R Limited indirectly via the share ownership in Q Limited apart from its individual shareholding in R Limited. So again, P and R will be deemed as related parties. Question number third. I will give you 30 seconds to think over it. Don't be in a hasty mood to write the answers on your own. This is a kind of typical question. Whether X Limited or Y Limited are related to O Limited and vice versa in the following shareholding pattern. X Limited holds 51% of Y Limited. So question number one, whether X is related to Y, then Y Limited holds 51% of Z Limited. Question number second, whether Y is related to Z. And the number third, O Limited holds 49% of Z Limited. So question number third is whether O is related to Z. And question number four is whether O is related to X and Y. So think and then we'll analyze. So X is related to Y because of control. Y is related to Z because of control. O is related to Z because of significant influence, because more than 20%. But the basic question is whether O is having any relationship with X and Y. Let us analyze. So X Limited, Y Limited, and Z Limited are related to each other. We just have understood. O Limited and Z Limited are also related to each other by virtue of associate relationship. We just have understood. However, neither X nor Y are related to O Limited and vice versa, because X and Y is having no connection, nor of a controlling connection, nor of a influence connection, and hence there is no relationship between X, Y vis-a-vis O. Number 4 question. A husband and a wife are controlling 34% of voting power in XY Limited. They are having a separate partnership firm which supplies mainly the raw material to the company. The management says that above transaction need not be disclosed. So question arises whether XY Limited and partnership firm are having any relationship under Ind-AS. Answer is yes. Just see why. In accordance with Ind-AS 24, XY Limited and partnership firm are related parties, and hence disclosure would be required irrespective of whether they are at arm's length or not. Now, why they are related? The reason is simple. In XY, they have a significant influence and they're common to the partnership firm, and partnership firm is under control. And that is why what will happen? Control also includes significant influence. So both are under my significant influence, and that's why there is a kind of relationship between the firm and the company XY Limited. And more importantly, XY Limited is having the transactions or not, that is immaterial. I mean, the pricings there or not, that is immaterial. Because I told you, the pricing matter is relevant only for company Z and is not relevant for Ind-AS 24. Question number 5. X Limited is a wholly owned subsidiary of Z Limited and a 50% co-venturer in joint venture XY. Question is whether transactions between joint venture XY and Z would require disclosures. Answer again is yes. We just have covered in the second segment definition. Z Limited controls X Limited due to holding subsidiary relationship. So by default, they're related. X Limited is a 50% venturer, and accordingly, Z Limited has a joint control over the joint venture XY Limited through X Limited. And because of the joint controlling, what will happen? Disclosures will be required, and hence transactions between Z Limited and the joint venture may be considered as RPTs under Ind-AS 24. Question number 6. A Limited owns 60% voting power of B Limited, which in turn owns 70% voting interest in C Limited. X Limited owns remaining voting share in C Limited. So 30% voting interest is with X Limited. During the reporting period, X Limited enters into transactions in ordinary course of business with A Limited. Would X Limited a party related of A Limited? That is the answer. X Limited is not related. Why? It is neither controlled nor controlling, and there is no significant influence also. So all these questions and answers are already in the PPT, which I would be sending to ICSI. If you have any mechanism to get from ICSI, these will be there. But one thing is surely certain. What I experienced in my last 25 years is most of the professionals are not having the habit of analyzing RP and RPTs on pen and paper. They do from this place only. The better way to analyze whether a part is related or not is use pen and paper. Draw the chart on pen and paper and then see what kind of relationship is coming out. If you will simply draw the map of RP in mind, no, things can go haywire. So better it is to take a studentship scenario, always draw on a paper, and then analyze whether the parties are related or not. So again, from my side, this is it. And I believe whatever discussions we had today will be enriching for your practice or job, as the case may be. So Sandeep ji, any other instructions from your side?
Sir, Kamalji, I have seen the webinar is one of the most vibrant, one of the most live webinar from your side.
Thank you, sir. It's my
My
privilege that
special thanks,
ICSI invited me.
my special thanks, my heartfelt thanks to you, sir.
Thank you, sir.
And hope all my CS colleague has been benefited with your person of wisdom.
Thank you, sir.
Thanks to my ICSI team also. Thank you, sir. Thank you very much.
Okay, sir.
Have a
Any
good
other
day.
question or shall we leave now?
Please leave, sir.
Okay, okay.